Most people are so worried about Bitcoin's price because it's coming down that they don't zoom out and look at the bigger picture. They don't see where this is going in the long term. In this video, I want to explain to you how market cycles work and how market psychology works and has a massive impact on Bitcoin's price. Let's get started. This is the most basic picture of an economic cycle that you can look at. So you can see here that there is going to be basically peaks and valleys where the price comes up, then it comes down, comes up, comes down. There's an expansion period where the price is slowly going up. The market is slowly getting better. It's getting more powerful. This is where, let's say, businesses that are built that have survived the previous trough or valley, the previous contraction, are doing well. So we have the expansion companies that are doing well, companies that are starting to produce goods, starting to sell goods that are of value. Then we have the peak. This is where everybody is buying, everybody is spending as much money as they can. They're buying whatever they can, and sometimes they're buying it with money that they can't afford. So when they buy things with money they can't afford during the peak, inflation starts rising. So prices start going up, home prices start going up, the prices of, let's say, groceries, cars, everything starts going up in price because people are buying things with money that they don't have. So we have the peak. And then when inflation starts getting too high, the Federal Reserve starts increasing interest rates because they want to slow down borrowing and they want to decrease prices. So we have a contraction where this is where anybody who's over leveraged, anyone who's borrowed money that they can't afford to pay back, gets wiped out. They just lose everything that they have. So let's say you have a house, you bought a house where you bought a $2 million house, you have a $100,000 income, and interest rates go up. Let's say you're in Canada and you have a variable rate interest. Interest rates go up. Now you can't pay back your mortgage and you have to sell. So what happens is prices start coming down. There's a contraction because you're not the only one who's impacted by this. There's going to be people all around the world who are impacted by this. So, or all around the country who are impacted by this. So the price starts coming down. This is just in general. This isn't specific. I mean, I don't understand every single market factor. There are a lot of factors that go into this. This is just a general scenario. So let's say people start selling their houses. You have more supply than demand because interest rates are up. People aren't able to borrow money to buy houses. They're not able to bring their future consumption to today. Price starts dropping, and at a point when things get too bad or when something starts to break, something starts to crack in the foundation of the entire thing, the Federal Reserve starts decreasing interest rates in the US, starts decreasing interest rates again. And then the Bank of Canada starts decreasing interest rates again. And then the entire world starts decreasing interest rates. And what we have is a new surge of people who are willing to borrow money to spend again. So in the trough at the bottom here, we have businesses who start borrowing money. We have businesses who create a new product. They've been building during the contraction period. They've been building because they didn't borrow money. Maybe they used their savings to build their business, and they don't need to pay somebody back. So they don't care about the interest rates going up. It doesn't matter to them. So they just continue to build. They use their savings, and then in the trough, when everyone else is struggling, they're still working hard, and they start finding opportunities because in the trough is when the central banks start decreasing interest rates again, and they start lending more money out, and they start letting people borrow. So whatever their business is, maybe people are willing to borrow money to buy their product from them. And now they have a ton of orders, and now they're starting to expand, and maybe they start borrowing money. And they start expanding. We see the expansion, and then we see the peak where maybe this is a business that used to not borrow money, and now it started borrowing money, and maybe they didn't understand how that works. Maybe they didn't understand that interest rates can go up. Maybe their business loan, the rate has gone up, and now they can't afford to pay it back, and then they see the contraction. So this happens in cycles. This will happen over and over again. We're not going to see flat markets. We're not going to see markets just moving sideways or moving straight up. That's not going to happen. If you're expecting that, you're going to be very disappointed. I'm not saying that this isn't for you because investing and saving in Bitcoin in general and business is for everyone. Everyone makes economic decisions. Everyone is deciding what to do with their money. So you need to understand what this is rather than get scared and just pass on it. That's not the right decision to make here. So once you see this economic cycle, you can start making better decisions. You can start seeing that when prices are coming down, maybe it's not time to get afraid, because what people do is when they see the prices of something come down, they start selling. Let's say they own stocks and they see the market price, they see the S&P 500 starts dropping 30, 40% or 20%, and they start selling. That's where the trough happens. And then that's where the recovery starts happening. So let's switch over to another tab here. This is a great chart. It shows you that markets don't move sideways. They don't just go up. This is a chart for pretty much any asset. We can see this for Bitcoin. We can see this for bonds. We can see this for real estate, stocks. There's going to be points where the price comes up, then it comes down, comes up, comes down. There's going to be small pullbacks. There's going to be on the way to, let's say, a new peak, on the way to, we can see here, on the way to prosperity, there's going to be a drop. It's not always going to just, the prices of assets aren't just going to keep going up because people don't have enough money to keep buying those assets over time. As prosperity happens, as the market matures, people learn, they make better decisions, and that's where the prosperity comes from. So we can see here the peak point of maximum financial risk. This is where if you buy whatever asset it is, maybe you're going to see a drop of 30, 40, 80% over the next 3 years. But then the next cycle, the next time there's a peak, there's going to be cycles. Again, this is going to happen over and over again. The next time there's a peak, it's a little bit higher. We see higher highs, higher lows, higher highs, higher lows. That's the main thing that you want to take away from here. The main thing is over time, we'll see growth. It won't just go straight. The markets won't just go straight up. Prices won't just go straight up. Bitcoin's price won't just go straight up. You need to understand this. Once you understand this, it makes it much easier to continue holding it or continue buying it. So we can see here there's disbelief. This is where people think that, oh, the price is coming down. I think this is where we are right now. We're at disbelief. People think, it's going back to zero. This thing is, there's nothing here. It's garbage. Once it starts coming up, people will start buying again. I think we're at disbelief. The 60K, I don't know if you can see my pointer, but I don't know if you can see my pointer, but at the bottom left here, we can see disbelief. Right above it, there's hope. People start thinking that the price is going to move up. Okay, so maybe I'll start buying. These are the people who have been studying this thing, whatever this asset is, for a few years. So they start buying. They think recovery is possible. Maybe I'll start. So the people who are buying in the hope phase are probably the ones who maybe were paying attention to Bitcoin on the way up in 2020 to 2021, and maybe they watched it come all the way down because they thought it was going to zero, or maybe they accumulated a little bit and they just set it aside and they forgot about it. At the hope phase, these are the people who are buying. Then we see optimism. Then we see the retail investors coming in. This is where we see a melt up, where the price just shoots up. Retail investors start buying, they start borrowing money, they start taking excess leverage, they start thinking that they're smarter than every other market participant, and we see the prices shoot up. We see the market heating up, and then we see belief. We see people thinking this is where we need to get invested. This is where you see people buying, let's say, an asset instead of paying rent, because they know for a fact that by the end of that month they're going to be up on their money and they can take that risk. That's where belief happens. And then we see thrill. People start being stupid. They start just borrowing on 100x leverage. They start buying NFTs. They start buying just all the random dog coins that you have. That's where thrill is. And then we see euphoria. This is where people are selling their assets and buying other assets, and they're flipping in a day, and then they're moving those assets into other assets that are even more leveraged, more risky, and it just keeps going. This is where at euphoria, at the very top, is where every retail investor is in. This is where there's no more demand that's coming in. All the demand has been fulfilled. Everybody who's paid attention to Bitcoin, or even not paid attention to Bitcoin, has bought. At this point, of course, there are people who are buying regularly, people who are buying no matter what. But then at this point, all of the hype has faded away. Nobody is borrowing money anymore. There's no more money to be lent to buy Bitcoin anymore. And then we start dropping. Prices starts dropping. This is what happened. I'll show you the chart for Bitcoin right after, so we can see here. We see complacency. We just need to cool off for the next rally. This is where people think, oh, it's fine. Price is coming down. That's perfectly okay. I will just keep buying. It'll come back up. I'm going to borrow more money. It'll come back up. I'll buy more. I'll buy as much as I can. Just let it ride. It's okay. People start panicking a little bit. They think that we're in the disbelief phase essentially. And then we have anxiety. And then we see margin calls. We see people thinking that this dip is taking longer than expected, and they're scared. They're getting worried. They're getting a little bit depressed about where things could be going. And then we have denial. People are thinking, we actually, let's zoom in here a little bit. We can see here that the price actually comes up. So it goes down and it comes up. People think, oh yeah, I'll be okay. Don't worry about it. I'll be fine. Nothing to worry about. This is not a problem. I'll just hold on. We'll get through it. And then we have panic. People think everybody is selling. I need to get out. I need to sell everything, get rid of everything that I have. This is trash. I should never have listened to that idiot on Twitter or that idiot on YouTube who told me to buy Bitcoin at 70K, whatever the price is. And then we see capitulation, and we see people thinking, I'm out, I'm done, this is over, I'm gonna sell everything. I can't afford to lose anymore. This is not where I'm looking to go. And then we see anger. People start getting pissed off. They see other people shorting the market and making money, like Michael Burry. They start seeing people like Bill Ackman making money from shorting the market, and they start asking why this is even allowed. I bought this asset. Why is this person able to short it? Why are they more informed than me? Why are they making money when I'm losing money? That's where people start getting really angry. And then we have depression. My retirement money is lost. How can we pay for all of this new stuff? I'm an idiot. And they've already sold everything. Everything is gone. This depression is where FTX collapsed. And this is where everybody lost their Bitcoin. This is where last year, this was, or I would say during the great financial crash, in 2007, 2009, this is where, what was it? Lehman Brothers collapsed. That's where they fell apart, and everybody had to sell. Everybody had to get rid of everything. They just got destroyed. But then the market moved sideways for a bit. It keeps moving sideways because people are all depressed. They're thinking, oh, it's over. I can't do anything now. We're not going anywhere. They get rid of everything. They get rid of all of their assets, and now they have nothing. And then the market starts recovering. These people are still thinking that, oh, I'm smarter than the market. I would never have sold if the market is not going to go lower. I'm only selling because I think the market is going lower. So they've sold, and now the market starts recovering. We have disbelief. Those same people think this is a sucker's rally. So these are the same people who are thinking that Bitcoin is going to zero. When you saw podcasts around the time when FTX was collapsing, people were saying, oh, Bitcoin's going to zero. Peter Zahan, macro economist, said Bitcoin's going to negative $1,000. That was when FTX collapsed. So let's switch over to another chart. I think this one's even better because this one's going to show you exactly what I'm talking about. This is Bitcoin's price. You can see here, it moves sideways, comes up, drops. Moves sideways, comes up, drops. Moves sideways again. You can see this is essentially just a sideways movement right here. Moves sideways, comes up, drops, comes up, drops. This is where, so this part of the cycle was a little bit weird because China banned Bitcoin mining, I think around here. And then Elon Musk came out and said that they're buying Bitcoin. So it was just all based on hype. It dropped based on hype. It dropped because of fear, and then it rose again because of hype. So who knows what will happen? Who knows what will happen here? But at this point, we had the again. Let's switch over to here. So we can see euphoria, and we can see complacency. Switch back here. Euphoria, complacency. We can see anxiety. People are getting worried. So this area is anxiety. This area is denial. I'll zoom in. This area is denial because it's starting to make higher highs and higher lows. So people are thinking, oh, we're still good. Bitcoin's still going up. Don't worry, it's still going up. They haven't actually studied the thing. They bought up here and they're thinking, I can only make the right decision. So they bought here, and now here they're in denial. They're thinking, oh, the market's not going any lower. We'll be fine. I'll just hold on. Okay, let's switch back here. And we see denial, we see panic, we see capitulation. It's almost the exact same thing. The chart works almost exactly the same way. We see denial, capitulation. See that? All those red candles consecutively. You see that there? People are selling. They're selling hard. There's a lot more supply on the market than there is demand. At this point, this is back in 2022. So from March 2022 all the way to November 2022, the market price pretty much just went down, just went all the way down. This is where FTX collapsed, November 2022. Again, let's switch back to this chart. FTX collapsed here. Let me see that. And then we see depression. Depression is sideways. Exactly the same thing. People were depressed here. They were thinking, oh, you would be surprised how many people told me. I forgot to switch back, but this is where we see depression, the sideways movement. You'd be surprised how many people told me that Bitcoin is going to zero. How many people have said, you're an idiot. You don't know what you're talking about. You haven't studied this thing. It's going to zero. It's going to nothing. But okay, so let's go back to this chart. So we can see here. Let's switch back to the Wall Street cheat sheet. Disbelief. Right around here, I'd say. And then we see hope in these areas. Let me see that right here. Exactly the same chart. I think that where we are right now is this place. We're right here. We're at hope. We're just moving sideways. Exactly what you see from the chart. Most retail investors have not even started thinking about Bitcoin, and I'll show you that right now. Google Trends, what it shows you is how much people are searching for something. If we go to worldwide, and then we go to 2004 to present, because I just want to see everything, we can see here, people aren't searching for it. We're at the same level right here, August 2024. We're at the same level as we were in January 2023. What was Bitcoin doing in January 2023? This was January 2023. People were not even thinking about it. They didn't care. But a lot of people think that because we're just moving sideways here, the price is going to drop. Everything is going to fall to zero. I don't think that's going to be the case. I think where we are right now is probably around here. We're right here. So let me zoom in. This was where the reason why I'm saying this is because this is where the last halving happened. The last halving was May 2020. It happened around here. It went up and then it actually just moved sideways for a while. This sideways movement, the one that we have right now, is much longer than this one, of course. We can see here, let me zoom out. This sideways movement has been happening since February 2024, actually. Since March 2024, not February, March. Oh, February 2024. We can see here. We can see where the price was at February 2024. We pretty much just went back in time to February 2024. So if you wanted to buy in February and you thought, oh, prices just came too high in March and you didn't buy, well, now you have the opportunity. We just went back in time, right? So the prices have been moving sideways. Who knows what will happen here? Who knows where things will go in the short term? If the price goes down, I would be happy. The reason why is that I know if the price goes down, I'll have an opportunity to buy more. We see the price drop to 63K. And as long as you're not in a leveraged position here, I think you should be fine. You should be perfectly okay, because this is a 10-year, 15-year asset that you want to hold. You don't want to hold this for 3 months, 4 months, 5 months. You don't want to be the people who bought up here. You want to just hold, you want to buy over time. You want to buy slowly so that you don't have to panic about the price. You don't have to worry too much about where this is going. We know this is going to be volatile because this is a brand new asset class. It's one of the newest asset classes. It's only been around for 15 years. Most people have zero allocation. They have nothing. They don't have Bitcoin at all. 99% of people have zero allocation to Bitcoin. And that's because they don't understand it. They don't care about it. They don't see where it's going. Once you study it, it becomes easy to see where this is going. Higher highs, higher lows. You see higher lows. We're never going back to the $3,000 level again. I mean, maybe we do. Who knows? But I don't think we will. We're never going back to. I don't think we're ever going back to triple digits. We're never going back to the hundreds. I don't think we're ever going back to below 10,000. I think the next stop here, just based on the way that things are moving, based on demand, based on supply, based on how much Bitcoin ETFs are buying, I think we will go to $100,000 eventually. I don't know when. Who knows? Nobody knows when. Nobody can tell you exactly when this is going to happen, but eventually it will. That's the only thing that matters. If you have a long enough time horizon, all that matters is that you keep holding and you don't panic, you don't sell, you don't do something like what people did every single time that there's sideways movement and people get bored. People get really bored during these sideways movements because they're just focusing on the price and they just see the price go up, come down, go up, come down, and they haven't done anything at that time. So they think, I bought at 63, I should have sold at 74. Oh, I missed out. And then they see the price start coming down again and they think, I should have sold at 74 and now the price is coming down. So maybe I should get rid of this thing so I don't make massive losses. It's coming to zero. A lot of people who bought up here, a lot of the people who bought at 73, 74K right here, they bought a massive lump sum of it and they didn't study what it was because they just thought it would keep going up. They just heard Larry Fink on TV. They heard people saying that BlackRock is buying tons of Bitcoin. They just heard about that and they bought, but they didn't really study what this is. So they're panicking. They're thinking, oh, I should have waited to buy at 53,000, or I should sell here to minimize my losses. And now that's what's happening. Those are the people who are selling this thing. The people who are selling right now are the ones who haven't understood it, who don't know what this is, who haven't put in the time to learn what it is. And if it goes lower, I'm okay with that. I've told you this multiple times. I've said this. I don't care if it goes lower. I don't care if it goes to $1,000. I don't care if it goes to $3. I'll buy more, right? That's the point. It won't go that low, of course, but I mean, if it does, why would you not take the opportunity? It's not like the fundamentals have changed. Unless the fundamentals change, that's different. But let's say we just have let's say we have Satoshi Nakamoto selling every single 1 million, all 1 million of her Bitcoin. Apparently they hold 1 million Bitcoin. Imagine they just start dumping them on the market at whatever price they can get. Maybe the price does drop to $1,000. But if the fundamentals haven't changed, why wouldn't you accumulate? Why would you sell what you have if the price drops 70, 80, 90% from here? Why would you sell? Because the fundamentals haven't changed. Eventually that will happen. And what it'll do is it'll wipe out anyone who's taken on leverage. Anybody who's borrowed 10% against their Bitcoin, anyone who's borrowed 5% against their Bitcoin, they're going to get wiped out because unless they have more cash flow coming in, unless they have more money to fund that loan, to re-collateralize that loan, their assets are going to be sold. And that's just what happens. That's just how markets work. In the current financial system, there are companies that are too big to fail and they can never get their assets sold, and they'll never go broke, and they'll never go to zero, because that's just how the financial system works. We keep funding them with more and more money. On a Bitcoin standard, you can't do that. You can't print more money. You can't add more money to the system and bail out the people who have made stupid decisions. In the legacy financial system, that's exactly what happens. So over time, we're going to follow this cycle over and over again. We're going to follow this cycle as well over and over again. We're going to see an expansion. Right now, I think we're in the expansion phase. I don't think we've hit the peak. Chances of that happening at this point after halving are very low. Just fundamentally, the amount of Bitcoin entering the economy has decreased. The amount of new Bitcoin entering the economy has decreased. So what we're going to see, in my opinion, is higher prices over time. And then we're going to see a contraction eventually. We're going to see people who borrowed tons of money. Let's say Bitcoin goes to, let's say we see, okay, let's be conservative here. Let's say we see 120,000 and it starts dropping. Let's say that's the peak. There are going to be people who at 120,000 will have borrowed tons of money. They will have borrowed hundreds of thousands of dollars, even millions of dollars to buy Bitcoin. And now this thing is dropping. Maybe we go back to 50K or we go back to 40K, 30K, who knows, whatever, who knows what happens. Who knows who collapses at this point? FTX was the last one. Who knows who collapses here, right? So whoever collapses, they, let's say they've borrowed tons of money in US dollars to buy Bitcoin. Right now, we don't see Bitcoin as money. We see US dollars as money. So they borrowed a ton of US dollars to buy Bitcoin. The price starts dropping. They panic, they sell, and that gets added to the economy. All of the Bitcoin that they bought, when you borrow to buy something, you're essentially just bringing your future consumption to the present to make to basically balance it out. If you buy too much today, you have to sell excess tomorrow. If you buy too many houses today, eventually you'll have to sell those excess houses because they're going to be too expensive to maintain on a Bitcoin standard. So in this case, we have people who have borrowed tons of money here. They borrowed, let's say, 2x, 3x, 5x. They put down 20%, and then they borrowed 80% of the money to buy Bitcoin at 120K. And they think it's going to 200K in this cycle. And it doesn't. It starts dropping. So they have lost a ton of money. Now all of that Bitcoin goes back to the economy and the price starts dropping. So again, we see, if we go back to this chart, we see that would probably be in the euphoria stage. I'm a genius, we're all going to be rich, but they end up being wrong and the price drops. They sell everything and the price starts coming back up again and they start buying again. And these are the cycles that most people go through because they haven't seen a chart like this. When you see charts like this, it helps you to make better decisions, to make more informed decisions, to be more rational, to be smarter with what you're doing with the markets. The markets are designed to scare you. They're designed to shake out anyone who doesn't understand what's going on. The difference between Bitcoin and the legacy markets is that there's no information asymmetry in Bitcoin. With Bitcoin, we all know the fact. We all know that there will only be 21 million. There's never going to be more than 21 million. No matter what, no matter who tries to control the network, there's never going to be more than 21 million. That's all you need to know. On the other hand, with, let's say, businesses, let's say a publicly traded company like Apple, the people working at Apple have asymmetrical information. They have an advantage with information, so they can make better decisions, right? So they can, let's say, for example, if we have a recession and then at the end, in the middle of the recession, Apple says that we've suddenly started, we've hit our bottom, and now sales are going up. The people who are the insiders can see that early, before Apple starts saying it in their meetings, for example, in their guidance. The people who are insiders can start buying Apple stock before they say that publicly, and they can take advantage of that. That's the information asymmetry that makes the legacy financial system so much worse for retail investors. That's what makes Bitcoin so much better, because with Bitcoin, there's no earnings report, there's no company, there's no executives, there's no people making decisions at a higher level. There's no executives, there's no people making sales, there's nobody to boycott. All that stuff is irrelevant. We're not going to suddenly see the supply increase to 25 million overnight because of how the network is enforced. The rules of the network are enforced. That's the information symmetry that we want. Because of that, because we all know exactly how many coins there will be, once you understand that, it becomes a lot easier to get through this cycle, to get through the psychology of the market cycle. It becomes much easier to detach your emotions from reality when you have, when you know the facts, when you understand what it is. So over time, we're going to see more and more people just buying. I think we're going to see higher highs. I could be wrong. I'm not saying that I will be right. No matter what, if you're going to buy Bitcoin, have a 5-year time horizon. Don't think of it in months. Don't think of it in days. Don't think of it in weeks. It doesn't work that way. We could see much, much higher highs. We could actually even see much, much lower lows. Who knows? Maybe Bitcoin's price drops below the 16K level. I don't think that's going to happen, but you should always be open to everything. You should always be open to to thinking outside the box. When people don't think something is going to happen, that's exactly when something happens. A lot of people right now think that, oh, Bitcoin's going to zero. I have a feeling that we're going to go much, much higher regardless of what happens in the short term. We might see lower lows here. We can see if we just look at this part here, if we don't look at anything else, if we just look at this, we can see here that there are higher highs, or sorry, lower lows and lower lows and lower highs. We just zoom out, just look at this part here, we can see lower lows, lower highs, but that's okay. I don't care. In the short term, maybe most people will be scared, but I think that this is just a movement before a blow off top. The longer we go sideways, the bigger the move up. That's just how it works. If we drop to 25K, I'm not complaining. But if we rise to, I would actually hate it more if we went up to 500K in the next month than if we were to drop to 20K. Because I know for a fact at 500K, the only people who are able to buy Bitcoin are the institutional investors. They're the only ones who are able to accumulate it. The people who are accumulating, trying to reach one Bitcoin, they've been putting in the time, they've tried to reach their goal. They may not ever be able to reach that goal again. So if your goal is to buy one Bitcoin, you would be much better off if the price drops. So I don't really get why people complain. Most of the people complaining, most of the people selling are the ones who don't quite understand it. And that's perfectly fine. There's always going to be people like that. There's always going to be bad decisions and there's always going to be good decisions. There's always going to be people who make uninformed decisions. There's always going to be people who make decisions based on research and thinking about where this can go. So be on the right side, study the asset, study where this is going, study this chart. You can just go on Google and search Wall Street cheat sheet, just look through it and just learn the different phases. Maybe I'll go through the different phases. Maybe I'll do a deeper dive on that. Maybe people will find that interesting, but that's something that I would recommend doing. Of course, understand this as well. Long term, this is what happens. We can see here, it goes up, comes down, goes up, comes down. And we can even see this with the S&P 500. So let me switch to SPY. SPY is moving up and coming down, moving up, coming down, moving up, coming down. Exactly the same thing. This will happen over and over and over again. If we see Bitcoin's chart again, switch over to BTC, same thing. These cycles are normal. This will happen. If there's no cycles, it means that there's no growth. It means that you just move sideways. It means that all of the benefits of holding that asset have already been extracted from it. That's when the asset moves sideways. That's when the asset starts dying. At this point, I think we are so early that most people haven't even considered that Bitcoin could be $1 million, let alone thinking that it's possible and doing the research to confirm that thought. That's where we are. We are so early. You can still buy one Bitcoin, 1 out of 21 million for the entire world. And this is supposed to be money that the entire world is going to use. You can buy one for less than a year's salary for some people. That's crazy. Once people see this, it's not like they're going to want less. They're going to want more. Demand will always go up. Bitcoin is a Veblen good. As the price goes up, people want it more because they trust it more. The market dynamics are weird compared to, let's say, other goods. Let's say, for example, a consumable good. Something that's a consumption good, the price goes up, people want it less because there are substitutes. For Bitcoin, there are no substitutes. Just like with gold. With gold, there are no substitutes. You can only use gold in certain industrial processes. Same thing with Bitcoin. You can only use Bitcoin in certain processes. Bitcoin is the only global form of money that everybody knows, everybody can audit, everybody can be a peer in, and there's no people making rules. There's only people participating in the network. That's something that Andreas Antonopoulos said. There's no rulers, only rules. That's what it was. No rulers, only rules. That's exactly what Bitcoin is. And more people are going to figure it out. More people are going to understand this. They're going to see why this is so important. And that's where we explode. I made a video about accumulating at least 0.01 Bitcoin. And if you want to watch that one, it's on your screen right now.